Hello, everyone! As a wealth advisor specializing in high net worth new immigrants and professionals, many of the families I serve share a common feeling. They work very hard, yet their finances feel increasingly complex and the pressure keeps growing. In fact, this is often an important sign that something is wrong with a family's financial structure. Healthy and sustainable wealth management is usually built on three elements working together: clear and well-defined financial goals, a properly aligned wealth structure, and timely action with consistent follow-through. With the new year beginning, I created this New Year 90-Day Family Financial Action video series to clearly explain these three elements. In the US, doing the right things in the first 90 days of the year is often more important than 10 years of unfocused effort afterward. In this episode, I'll start with the most fundamental and most often overlooked three aspects of financial goal planning. Topic 1. Have you chosen the right wealth track? In the US, wealth is not accumulated randomly. It moves forward along a specific track. That track usually centers on one of three priorities: stable cash flow, long-term retirement security, or family legacy and risk isolation. What I often see, however, is that many families make investments that each look reasonable on their own yet together lack a clear direction. They pursue high returns, worry about volatility, and want to stay conservative all at the same time. The result is more accounts, but increasingly exhausting decisions. This happens because they haven't chosen the right wealth track, or don't even know what their wealth track is. They become anxious with every market movement and try to seize every new opportunity, and over time their asset structure becomes increasingly disorganized. To identify the wealth track that fits you, you must clearly understand what your family is worried about financially, what problems your wealth is meant to solve, what you are willing to give up when priorities conflict, and whether your financial planning is opportunity-driven or goal-driven. If you need help, I can guide you through a short Q&A process to identify your wealth management profile and clarify your personal wealth track. This step is extremely important because once it's defined, you can make financial decisions with clarity, set priorities correctly, simplify choices automatically, and filter out unsuitable options. Your financial anxiety will naturally decline, and you'll regain a sense of control over future decisions. Topic 2. Are your assets being slowly eroded by a high tax structure? For many high net worth families, the real problem isn't earning too little, it's that the percentage of income they get keeps shrinking. The reason is often simple: most of their assets sit in high tax categories. This situation is extremely common among new immigrant families. Consider a typical example. Two families each have $3 million in assets. Family A holds nearly all assets in taxable accounts, while Family B distributes assets across pre-tax, after-tax, and tax-free layers. With similar investment returns, industry analysis suggests that after 10 years, Family B's usable wealth will be significantly higher. If Family A does not restructure its assets, higher income will lead to higher effective tax rates, passive acceptance of heavy taxation, and shrinking planning flexibility. Retirement, investment, insurance, and annuity accounts form the foundation of wealth planning. High net worth immigrant families must clearly identify all their accounts, label each as pre-tax, after-tax, or tax-free, and review them at least once at year-end and at the beginning of the year. This helps you understand your full tax picture, clarify planning leverage points, and identify where structural adjustments are needed. Only by fully understanding your financial structure can you grasp the true core of wealth management. The issue is structure, not simply chasing higher returns. Topic 3. What are your use it or lose it wealth opportunities? In the US, there is a particularly unforgiving type of opportunity. If you don't use it this year, you won't get it back next year. This refers to retirement account contribution limits. For many new immigrants, the first few years pass by being busy, unfamiliar with the system, and lacking planning, until income rises and they realize those critical windows are already gone. I've seen many immigrant families leave their most important first 5 years nearly blank, only to pay much higher tax costs later. Failing to act at the right time permanently eliminates a portion of tax-free growth, forcing families to compensate later at a much higher cost. At the start of the new year, you should conduct a comprehensive review of all retirement accounts, check whether contribution limits were fully used, determine whether pre-tax actions are needed, and evaluate inter-account transactions or Roth conversions. This allows time to become your ally again and prevents passive retirement planning. You should review last year and the coming year's tax strategies with your CPA or wealth advisor. This is a critical planning window. Do not postpone simply because you're busy. As a wealth advisor, I can directly assist with opening most retirement accounts, IRA, Roth IRA, SHAs, and related accounts, saving you time and ensuring you act at the right moments. The 3 topics discussed today all focus on commonly overlooked but highly actionable foundations of family financial planning at the start of a new year. Remember, this single principle, direction, tax structure, and timing determine long-term wealth outcomes. In the next episode, I'll move into more concrete strategies, focusing on wealth structure and common immigrant family challenges, and explain why earlier planning makes life easier. If you found today's discussion helpful, have questions, or want to share your thoughts, feel free to comment or reach out for further discussion and support. Thank you for watching, and I'll see you in the next episode.